Welcome to Travisa Financial. Travisa Financial is a purpose-driven wholesale lender. We're not your average wholesale lender. We're a team on a mission to help you open more doors.
Is offer products to home buyers that otherwise would not be able to get into a home. And there's so many.
Reach more families and redefine what's possible for first-time homebuyers, especially underserved communities.
Having diverse lending products opens doors for folks that otherwise might not have access. And so it's understanding different cultures, it's understanding different backgrounds, and the fact that you might not have had the opportunities that others have had, but there's still a way for you to get into homeownership. And so understanding that those different backgrounds exist.
At Travisa Financial, we believe homeownership is more than just a transaction. It's transformation. It's the foundation for building wealth, stability, and legacy. Together with borrowers, we're committed to making that transformation real. Through education, transparency, and heart, we help more families step confidently into homeownership.
It seems so much further away that it's more important today to focus on this affordable lending issue, right? Or the affordable lending challenge to get people into homes.
Because when you know better, you build better. Every borrower you empower, every loan you close, every set of keys you deliver is proof that dreams don't have barriers, only bridges.
For Travisa, it's putting some strength on that bridge, because how you help a broker close a loan, the understanding of the dynamics of that consumer who's now getting older because it's so much harder, who has profiles that we're all trying to figure out, right? When you talk about millennials and Gen Z and their income and all that. And a lot of lenders go, this is just too much damn work. And I don't know if I want to do this because it might not be worth it. I don't know how to manufacture this. Where Travisa can come in and go, look, let's manufacture loans and let's help brokers get these people across, and let's strengthen the bridge, right? It's going to take us some time. It doesn't happen like overnight, but we know how to do it pretty well.
Join us in building bridges that turn the dream of homeownership into reality. Because at Travisa Financial, no one serves first-time homebuyers better.
Hello, everyone, and welcome to our EEP Power Up Deal Desk Thursday. I'm so happy that you guys could join us today. I want to introduce myself. My name is Monique Minaya, and I have been in the mortgage industry for about 28 years, since 1997. I have done everything from wholesale, retail, broker, processing, LOA, loan officer. I've ran a branch, and I've also owned my own contract processing company. I also worked over at the investor that developed the EEP program, and I was the EEP production manager over there. I ran operations. I also was on the underwriting guideline committee, and I contributed across all departments to improve the efficiency and compliance of this EEP program. And so I definitely know a lot about the program, and it is very near and dear to my heart. So over here at Travisa, I'm looking forward at helping you build your business with specifically the EEP program. Speaking of Travisa, no one serves first-time home buyers better. And we really want to make homeownership a dream come true for everyone. And we believe that through generational wealth, we can make that happen, along with our innovative loan programs such as EEP. So how does EEP work specifically? There's a government entity that is a Native American tribe, and they are called Tule River. So Tule River will purchase the home that your home buyer has picked out. So your home buyer will go out, they will pick out the home of their dreams, they will put it under contract, put down the earnest money, and then there's an assignment addendum. So this assignment addendum is executed by the seller, by your home buyer, and we send that over to Tule River to execute. And what this is doing is this is assigning the purchase contract and all details in the purchase contract over to Tule River. They will then get the FHA financing to purchase this home for your home buyer. Simultaneously, while Tule River is signing the FHA loan docs, your home buyer is going to go into closing and they are going to sign a homeownership agreement that has a memorandum that is recorded on title. And so this definitely gives the home buyer their secured interest in the property, being that there is something recorded on title. They can make improvements, remodels at their liking, and they'll even receive a 1098 interest statement at the end of the year. So a little bit about the EEP program highlights. We all understand that the reason why you're here is that your home buyer does not fit into the traditional mortgage box. For whatever reason it is, maybe their citizenship, their income type, credit issues with bankruptcies, or a lower score. So the EEP program has understood these type of home buyers and have some wonderful guidelines to make it easier for them to qualify for this program. So we have 3.5% minimum down, and this is for ITIN, non-permanent resident aliens, including DACA, and your US citizens. There are low and no credit scores. So when I'm saying low, I'm talking 580 credit scores. And if you pull a credit and there are no scores at all, that's okay. We just need a few extra alternate trade lines. We have bank statement programs. These bank statement programs are 3 months only, and we can do the bank statement program for not only just self-employed, but also for 1099 and W-2 home buyers. And the DTI is allowed up to 50 over 60%. There is no source or seasoning of funds to close. So getting into that just a little bit, we know that there are certain people that do not have that financial feel goods about the banks or credit unions. And so they save their money at home. They like to keep it nice and close to them. And so if they've been saving at home, they can go ahead and deposit their down payment, a week or two before closing, put together a letter of explanation explaining that they prefer to keep it at home, save it at home, and that's just fine with this program. Bankruptcies are okay. Bankruptcy specifically, let's talk about a Chapter 7. Chapter 7 has to be reporting on the credit report, and it can be discharged 1 day prior to closing. So they can go out, they can look for homes, they can pick out their home, put it under contract, and we just need to document that the discharge occurred 1 day prior to closing. All FHA types is what we're going to finance here. We have 1 to 2 units, HUDs, condos, manufactured homes. Definitely want to keep in mind though, if you're looking at a condo, it has to be FHA approved. So ensuring that is the case is definitely a great idea from the beginning, from day one. If you don't have access to do that, please feel free to reach out to us and we're more than happy to look it up for you. Also, seller contributions up to 6%. This will allow your home buyer to, reduce funds to close. And so 6% of sales price is definitely a great option for them. So when you are qualifying your borrower and the borrowers you're wanting to look for, you're looking for the ones that don't qualify for the traditional financing due to citizenship. Maybe they're an ITIN or DACA. They're also for doc types. We have both full doc and the alt doc, which is 3 months bank statements. If you do have a full doc borrower, we just need the prior year W-2, a couple months pay stubs, and a written VOE. And then other notes to point out is when we're looking at the 580 minimum score, you only need 1 major credit bureau. So if you pull a credit and you don't have 3 scores, no worries, just 1 major credit bureau that is a 580 or higher. Again, the no score is okay with 2 alt trade lines. We do require a verification of rent that is a 12-month history, 0 times 30. And we also do need 12 months of employment. Max DTI, 50 over 60. Gift funds are allowed. And the funds to close on the entity side, there are some entity closing costs. they include the first payment. And so it might seem like a lot, but just remember that that first payment is included in the funds to close. I do want to touch a little bit on self-employed borrowers with the 3-month bank statements. There is a standard expense ratio of 45%, although we do have a tiered expense ratio option. This is something that was put together because we do understand that some home buyers have more of a service related business where they don't have to buy a lot of products. And so what we wanted to do is ensure that we were, treating them just as fair as, maybe the product business guy that has 10 employees. So definitely look at the comparison here between service business and product business. Depending on how many employees they have, can determine an expense ratio that we can use in lieu of the 45%. And just keep in mind, to be approved for that, we do need a CPA letter or any online internet documentation to help provide the extent of what their business entails and maybe even how many employees they have. So when we're just getting into the I-10 market here, if you take a look at this graph, you can see that a lot of the I-10 programs are a little bit rougher. They're definitely rougher than our program. 15 to 20% down, 12 to 24 months bank statements, standard DTIs of 43 and 700 plus credit scores. Also, if you want to even go up to 55, you're looking at 2 comp factors. Where Travisa Financial on our earned equity program, down payment of 3.5%, 3 months bank statements, 50 over 60 max DTI, and a 580 credit score with only 1 bureau. Personally, I think that's huge. We also have so many resources for you. So we have our 877-888-ASK-EEP. We have our dedicated email, which is eepquestions@travisafinancial.com. You all have amazing account executives. We have Mr. Ben Slayton and Miss Norma Summers that are always available to assist and help wherever necessary. I'm available to help. And we have our AVP of operations, Shari Hatcher, and she's amazing as well. So we want to ensure that you have the support for this program. It can be a little bit more tricky than traditional financing. There's a few hoops to jump through, but it's a little more entailed of a process. And if you want a one-on-one personal meeting where we can explain the process, explain our TPO platform, we're more than happy to get you scheduled. We're looking at launching some other ways to have this support and help for you as well. Hi, how are you today?
Hi, how are you doing?
I'm good, I'm good.
Good. I was calling you because I have a scenario and
Okay.
I was wondering if you could discuss it.
Okay, tell me if you want to discuss it right now or if you'd like me to give you a call after the webinar.
Would you mind giving me a call, please, so we can talk one-on-one?
Yeah, absolutely. Yes, ma'am. Okay, I will give you a call right after the webinar. Sound good?
Okay, do you have my number?
I have emails from you from prior.
Correct. That
Yes.
is correct.
Yep, and
Okay,
that's a
very
good
good.
phone number in there? In the
Yes.
email? Okay, perfect.
Okay, good.
Okay,
Thank
thanks.
you.
Uh-huh,
Bye-bye.
absolutely. Bye-bye. All right, did anybody else have any questions today? Is it Edward?
Yes, hi Monique.
Hi, how are you?
Good, good. How about you?
I'm well, thank you.
I've taken your class before, but I'm just want to reiterate a couple of things that stick in my mind. You
Yeah.
have those 0.5% fee and a 0.75% fee. the borrower has to come to the table with his own funds. That's correct?
Yes. So essentially, the borrower has to meet their MRI of 3.5%, unless they're receiving a gift. And then the entity has some closing costs of their own, which you just referenced. And it also includes their first month payment. And those do have to be brought in to closing. And so ultimately, you're looking at about a minimum of 4.5%, 5%, if you have seller concessions to cover all the other closing costs on the FHA transaction, plus their mortgage payment, their first month's mortgage payment.
So the seller cannot cover those costs. So essentially the borrower is coming to the table with 3.5% down, and that can be a gift.
Correct.
The seller can pick up 6% in closing costs, but the buyer is going to end up coming to the table out of his own account with about 5%, which is going to cover the 0.5 point fee, the 3/4 point fee, and the first month's payment. And that's approximately 4.5 to 5%. Is that?
So that 4.5 to 5% is including the 3.5%. So if you get a gift for the 3.5%, then they're looking at about 1.5 to 2%.
Okay. So,
and then that includes their payment, their first month payment.
Right. So 0.5%, 0.75% first month payment, but they end up skipping 2 payments because their first one is already in closing. So do I have that all right?
No, they won't skip 2 months, but they definitely, if they close at the beginning of the month, they will have a delay until their first payment's made.
Okay. So, I think I have it then. So there is so that gift cannot include that 0.5%, 3/4% fee.
You are correct. It cannot.
Okay, I have it now. Thank you.
Yes, you're welcome. Anytime. Lydia.
I had a DSCR, I'm sorry, not a DSCR, DACA.
Okay.
So when I do the application on the DACA, I'm going to select conventional loan and then do the 3.5.
So for the home buyer, you're going to want to select on your 1003 that your Gizmo that you upload to our TPO Connect.
Right.
You're going to want to go ahead and just put in an FHA because they're getting underwritten by the government entity. It really doesn't matter, because when you upload to our TPO Connect platform, there's a drop down in there where you're going to select EEP, the Earned Equity Program. And so that's going to trump really whatever your 1003 says.
Okay. And could you go ahead and email me those, the PowerPoint that you were going through, or the guidelines?
Yeah. So what we're going to do is within about a few hours after this meeting, we're going to email you over a copy of the video along with everybody's information if you have any questions at all. Okay.
And then I can also go ahead at that time request credentials.
Let's see. Who are you with? I'm so sorry.
I'm with Nexa.
Nexa, yeah. So Nexa is approved. And what I can do is I can have Ben, your account executive, I can have him reach out to you and get all of the details going for that.
Please. Okay.
All right. Perfect.
Thank you very much.
Yeah, absolutely. All right. Does anybody else have any questions for today? All right, perfect. Well, thank you so much for joining us. We have our Monday scenario EEP Power Up that will be coming to you again if you want to join. We also have a masterclass that is coming up next Wednesday. So be sure to be on a lookout for that. That's going to be really exciting. We have some great guests and really good information for you guys. So anyhow, I will talk to you all later. Thanks for joining us. Bye-bye.